Hey, good morning, good afternoon, good evening. Let's do some post analysis, then we'll go straight to the forecast for today. For the post analysis, yesterday I looked at taking buys here with stop loss here, just like you see, TP just below this level, and price my TP was hit. Yeah, I would have left it at this golden level here, but remember what I always say. I like the conservative way, depending on the distance of the take profit from my entry. You understand? Because the golden level is pushing price to a level where there is going to be what I call anticipated reaction. Just like all you see here, all these bottom wicks versus this bearish, two bearish candles with this long bottom wick here. These are reactions from sellers. Okay. However, the buyers were not interested in giving up because they felt that they had gotten a better price and they need to push it as high as they could before letting go of the belt or whatever they have that gives them command of whatever is going on. So I took my TP here and let these other ones run to this aggressive TP. My conservative TP was hit and secured. Okay, in this particular scenario, you would observe three different levels that price could react from. This level, which is 163.152, 163.225, and the last one, the golden level, is 163.460. These first two levels could be hit. This one certainly would be hit. This one, the probability is there. This one is possible. And each of them gave me my TP. But I went for the conservative one, which is my one arrow, secured the position, then left about 15% of my 1% running to this total aggressive area. But don't forget, once price dropped to this point, I was like, okay, it is what it is. If it takes me out, no problem. 85% minus whatever would go out as commission, I'm okay with that. But I was very sure that price was going to hit this because of what I saw on the higher time frame. Okay, which is why this my TP kept I kept modifying it until this point, and it eventually struck my aggressive TP. Now for today, what I'm looking at is very simple. Okay, we are in a money spot, in the sense where sellers are looking to take price down to retest this low, and eventually, if they are strong enough, continue down. Meanwhile, buyers are looking to do what? Take buys going up. So what I'm looking at for today is if we get a bullish breach above this gray zone, I'll be looking to take buys going up. If we get a bearish breach below this, come back for retracement, I'll be looking for sales going down. You understand? So this is just what I'm looking out for. Another thing that could occur is to take sales once price is coming below this point. But that one is you being overzealous. But not like it's not going to work out. It's certainly going to work out because it had happened here before. Once price took out a particular segment I was looking at, what happened next? Market just kept pumping. But like I told you, there are times to go aggressively, there are times to be conservative. This one I took the aggressive buys, which played out. This is the conservative buys, which is certain. The probability of it getting your TP is certain. Okay. So if I wanted to take this aggressive buy, like in this situation, you would not take it with your full position. Meanwhile, the one that would break, come back for retest, would be the one that you can enter with your 1%. So this is what I'm looking at on GJ, British pound, Japanese yen. There's something I got to say before we move on to the next thing. Let me go back to the 1 hour time frame. Okay. Oh, where are you? Yep. 4, 5. Okay. Okay. This is doing some funny games, so let's leave it like that. Okay, what I want to show is this. Don't forget to subscribe, hit that notification button down here, comment and like. Now let's move on to the next one. The next thing I'm looking at right now is gold. Gold played out beautifully. However, my attention was on GJ, British pound, Japanese yen. I didn't want to just want to catch everything that is going on. So, like what I was looking at yesterday, if you followed the forecast, which was straightforward, is that if we get a bullish breach above this level, like this, come for retest or retracement, we'll be looking for buys. If we get a bearish, in fact, what I would advise you, which I will always do, is go and watch the forecast for yesterday to have a better understanding of what is going on today, because there are things that I said yesterday that I may not say them today due to time constraint and me trying to congest everything into one unedited video recording. So just watch the forecast for yesterday, come back and watch the one today, or watch the one now, go back and watch the forecast for yesterday, come back and watch it. You'll discover that there is an aha moment, a change in understanding, or would I say an increase in understanding to see why price eventually dipped. If I wanted to take this yesterday, my sales would have been somewhere here, stop loss here, and certainly I would have gotten my 1 hour here or somewhere around here. Then certainly I will be holding this position, because right now we are in sellers market. We have gone below the daily demand. So dailies we are in sellers, and 4 hours we're in sellers territory. Okay, at the moment 1 hour is also in sellers territory. But don't forget, even if we're in daily sellers territory, we need to be very careful that we are sitting on a support level, not demand, but support. Okay, so what we would want to do now is simple. Wait for price to do what? Retrace. Okay, wait for price to retrace before continuing down. But if it eventually breaks this low, good. If it eventually breaks this low, then we expect it to retrace later, respecting this, whereby this support will be the one to ignite this resistance for it to drop. If it does not breach or take out this support, then I'm expecting it to rally to this point and then eventually dip further, either here or here, so that it's going to form something like a head and shoulder pattern. Okay, something of this nature. So like I always say, there is no need to memorize it. Understand the concept. And what is the concept? Price always anticipates support, just like the term support. When something is falling or someone is falling, you hear the term, please support me, meaning give me an aid. So in this particular scenario, price I would want to see on the daily time frame, we'll be anticipating a bigger retracement. However, on the 4 hour time frame, we have gotten some retracement. So using the 4 hour time frame, we'll be looking at potential sells. Okay, the 4 hour time frame, we'll be looking at potential sells. On the 1 hour time frame, I'll be looking to take sales below here in order to go down. Then my stop loss will be above here. Okay, that's so if we take out these lows, I'll be looking to take sales with my stop loss here. Then TP will be 1 arrow, which is 1:1 risk to reward. So this is just what I'm looking at for. For buys, clean buys only occur above this zone. So you can just draw this in your this thing on your chart. But since you're here live, you will eventually understand these levels. I'm drawing it. Let me just do something. This level is 178 to 1782.095, 1777.761. This is the level I'm looking at. If price breaches this, I'll be looking to take buys. At the moment, my bias is what? To go down. I have a bearish sentiment. Okay, seller sentiment. With that being said, let's go to the next thing on my agenda, which is Bitcoin. Just like gold, Bitcoin and gold have been correlating. What do I mean? Whatever gold does or whatever Bitcoin does, gold tend to do the same thing. And because both of them have one common counter currency. What is the counter currency? US dollar. So this is just what it is. Tap, 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 slash US dollar. So why gold is XAU slash US dollar, Bitcoin is BTC slash US dollar. So anything that is trading against the dollar will tend to operate in similar context, which is referred to as correlation, okay, or parallel market moving in the same direction, okay, not opposite, okay. Another thing is when we're talking about correlation, the only most times that they tend to correlate like this is when US dollar is strong, very strong across the board, like is the strongest compared to gold and Bitcoin. Okay, is the strongest. If US dollar is weak and gold is stronger than US dollar, but Bitcoin is weaker than US dollar, you will see that gold will be rallying, Bitcoin will be dropping. So have that on the back of your mind. So in order to understand whether US dollar is strong, you need to understand fundamentals, you need to infuse fundamentals in your trading. Then you need to look at the DXY, which is the US dollar index. It helps you to understand if US dollar is strong. So a lot of these parameters are infused into this forecast you're seeing. But in order to make it easier for you to just come and see where you can just, okay, Phoenix Unique said buy above here. Okay, I'll be looking to anticipate buys here. Okay, sell below here. I'll be looking to anticipate sells here. However, I would try to understand where is this coming from, not just the technical aspect, but what fundamental is his analysis based on. So as you can see, based on the correlating factor, gold is dropping, Bitcoin is dropping. But what is beautiful about it is that they could separate at any moment. So whatever you're trading, be anxious, be skeptical, be speculative. Not anxious in a bad way. You understand? Be what I mean. Okay, let me scratch that. Instead of being anxious, be cautious. That's what I want to say. Be cautious. I think that's a better term. So be careful in trying to say, okay, because gold is dropping, I'll be looking for only sales. No. If you use that, you would go through and check where, if you use that mindset, you see that it did not work out here. All this time gold was rallying, but as you can see, Bitcoin has been ranging crazily for a while. Now that we are here, what I'm looking at on Bitcoin, Bitcoin is sitting on in the daily demand zone, is sitting in it. 4 hours we're in seller's territory, 1 hour we're in seller's territory. So let's see if we are going to get a bearish breach in order to continue the sales, or we'll get a bullish breach to take some buys. Okay, I would have said let's take buys inside of this place, but there is a strong level here that could hit price down. So you just got to be extremely careful, extremely careful. Price could react anywhere from there. At the moment, based on what I got now, okay, yep. So this just safe, in fact, safe buys would be above here, above this 4 hours supply zone here, this range. Safe buys. Don't forget on the 4 hours, what you see here is just a week. So if you're taking buys above here, you could be smacked down. So instead, this is what to do to be on the safe side. If we get deep retracement like this, which on the sellers is retracement, but for those who want to take buys, this is an impulsive move going up. You wait for retracement, take buys depending on how you trade it. If you're using the different strategies, you have to just imbibe different strategies. There is something though my mentor would say impulsive leg, retracement, you look for a V formation or inverse V, test one, test two, and you take your buys. There is a simple strategy. I think the person who talks about it is Ment FX. He talks about the 3 box strategy. I think that's the simplest way I can put it, because the one my mentor teaches is complicated, not in a bad way, but it makes you to just not trade because you see that it is coming into the box you want to take buys. What I'm trying to say is that the 3 box strategy is the support, impulsive leg, price retraces to where you had what we call the demand order block. Once it retraces it like this, your buy limit will be somewhere around here to take price up. You see how easy it is? This is what MenTFS talks about, and I appreciate how simplified he made it look. So this is the box, this horizontal box. You want to wait for an impulsive leg, then later you wait for the 3rd box. This is the 3 box strategy. My mentor would say consolidation, bullish leg, retracement, wait for V formation, test 1, test 2, and the test 1, test 2 cannot be all the time like this, and the V formation will not be all the time lopsided. You could have V from equal V, then even the test could be lopsided, test 1, test 2 before it goes up. So you see how you have to put into perspective all these stories. If it's a strong versus weak, or a strong versus weak, very weak or neutral, or a neutral versus strong, or a neutral versus weak, all these things you have to put into perspective. Okay, so he will talk something about strong can either do strong versus strong, or strong versus neutral, or strong versus weak. Then if it's weak, it could be weak versus neutral, or weak versus strong. If it is neutral, it will be neutral versus strong, or neutral versus weak, depending on what is the base currency and what is the counter currency. Okay, I'm going to stop here for now. Don't forget, in order to understand and get better understanding of this continuously, to learn, to see the fundamental aspect, to see the technical aspect, do well to subscribe, do well to hit that notification button down here, do well to comment, and the last but not the least is like. This strategy is from, let me write it down. This is from Ment FX. Okay, the 3 box strategy. He called it the 3 box strategy. Okay, so you have to keep seeing how others do things so that You're not trying to look at them down. No, there is always something to learn. Even when you think, don't be teachable. That's what I'm trying to say. Be teachable, be willing to learn, be willing to see what you know, correlate it with what others know. If it's something you can twitch a little bit, validate your strategy, see what others are doing that may not work out in the long term, see what you're doing. It helps you to just be on the right or a balanced state of mind. Because if you just remain close-minded that, okay, I've learned one strategy, let me just hold it forever, the market cycle changes. So you need to know what others are doing at this moment or point in time so that it gauges your trading technique or strategy to see how you can always be on top of your game. I'm going to stop here for now. Baraka Bashad.